In this video, we're gonna go over a 15-minute scalping strategy that produces super accurate buy and sell signals. We're gonna go over what indicators to use, the best settings, as well as the entry and exit conditions. Without any further ado, let's get into it. Now let's begin by adding the indicators that we need. Go to TradingView and load the 15-minute time frame of GBP/JPY. Then open the indicator search tab and type in twin range filter. Select this one by calling MCK. Next, type in ADX and DI and select this one by Beikabu Oyaji. Then we're going to change some settings. Double click on the twin range filter indicator and on the inputs tab, change the fast range to 1.5. For the slow range, we're going to change it to 2.5. For the ADX and DI indicator, we want to go into the style tab and change the ADX color to white. For the level color, we want to change it to yellow. After that, click OK. Now this strategy uses these two indicators. The twin range filter is going to be giving us the buy and sell signal labels. When it says buy, we buy. When it says sell, we sell. Pretty self-explanatory. The ADX and DI indicator is going to be used for two things. One, trend identification, and two, momentum identification. But before we explore its functionalities, let's go over this indicator's components. This yellow horizontal line is the 20 level. And as you can see, it's located at the 20 point on this indicator scale. This white line is called the ADX line. And it's going to be used to identify the trend in the market. When the ADX line goes above the 20 level, that indicates that the market is trending. It could be a bullish or a bearish trend. However, when the ADX line goes under the 20 level, that indicates a non-trending market, basically an area where you should not be looking to take any positions. This green line is called the positive directional indicator. And this red line is the negative directional indicator. And they are used to indicate the direction of market momentum. When the green line goes above the red line, that indicates that the bullish momentum in the market is higher than the bearish momentum. Conversely, whenever the red line goes above the green line, that indicates that the bearish momentum in the market is now higher than the bullish momentum. Next, we will explore how we can use these two indicators to enter long and short positions. But before that, let's talk about hankotrade. Now, you may be thinking, and what exactly is hankotrade? Well, hankotrade is one of the most reliable Forex brokers out there. For that reason, I use them every single day. As you can see here, this is my trading history. I mainly trade gold. And up here, you can see that this is actually a live account. The reason why I love hankotrade so much is because of their extremely low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest spreads can go. And for those of you who love high leverage, guess what? hankotrade offers up to 500x leverage. And if that's not enough, they're also going to give you a 100% bonus for all your first deposits up to $25,000. So if you deposit, say, $500, they're going to give you a bonus of $500, so in total you'll have $1,000 to trade with. To access the bonus as well as all the other perks, sign up to hankotrade using the link in the video description. Now back to the video. Now to enter a long position with these two indicators combined, these are the conditions. First, a long signal should be printed by the twin range filter indicator. This signal candle is going to be our entry candle. Second, at the time the long signal is printed, two conditions from the ADX and DI indicator need to be aligned on this candle. One, the ADX line, this white line, should be above the yellow line to indicate that the market is in a bullish trend. Condition number two is that we need the positive directional indicator, this green line, to be above the red line to indicate that the bullish momentum in the market is higher than the bearish momentum. All these conditions need to align on the signal candle for the entry to be valid. If any of these conditions isn't met by the time the long signal is printed, you simply skip that setup. All the entry conditions are met on this candle, so we're going to enter a long position. Set the stop loss right below the most recent swing low. For the take profit, we're going to set it at 1.5 times the risk. Letting this trade run, and it hits take profit. Then right ahead from this position, we had another long position. As you can see, a long signal was printed by the twin range filter indicator. At the time the signal was printed, the ADX line was above the yellow 20 level, indicating a bullish trend. At the same time, this green line was above the red line, indicating the presence of enough bullish momentum in the market. These conditions were met on this candle. So if you were to enter a long position here and then set the stop loss below the most recent swing low and target a 1.5 risk-reward ratio, this trade would have been profitable. This one, however, was not valid because despite the green line being above the red line, we can see that the white ADX line was not above the yellow line. So we will not enter a long position. Now, what are the conditions for a short trade? Well, let me show you. First, a short signal should be printed by the twin range filter indicator. This signal candle is going to be our entry candle. Second, at the time the short signal is printed, two conditions from the ADX and DI indicator need to be aligned on this candle. One, the ADX line, this white line, should be above the yellow line to indicate that the market is in a bearish trend. Condition number two is that we need the negative directional indicator, this red line, to be above the green line to indicate that the bearish momentum in the market is higher than the bullish momentum. All these conditions need to align on the signal candle for the entry to be valid. If any of the conditions isn't met by the time the short signal is printed, you simply skip that setup. All the entry conditions are met on this candle, so we're gonna enter a short position. Set the stop loss right above the most recent swing high. And then for the take profit, we're gonna go with 1.5 times the risk. Letting this trade run, and it hits take profit. This is a simple strategy, and to make it even better, you could try adding some price action confluence like support and resistance and only enter trades when the price does a break and retest of a support or a resistance level. You could also try adding a volume indicator and only enter positions when the volume is high enough to support the trend. That's been it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.